Hello, everyone. It's another episode of Stock Common Sense, fifth episode, and it's also the end of the month. So without further ado, let's go ahead and get started. Try to get you in and out as quickly and effectively as possible. Showing the S&P 500, we closed at 45.45. This is currently a monthly chart, a 10-year monthly chart. And look at this bar right here. We did close above one of the weekly levels that we had. But as you can see, this is a very flat bar, very flat bar. We were basically flat for the month. We opened the month at 45.40 and we closed at 45.45. So moving up by 5 points. I mean, progress is progress, especially when you see where we came from before. Oh, I'm sorry, I'm looking at the wrong candle. My apologies. Here's the March candle right over here. We opened the month at 43.63 and closed at 45.34. So there was an increase of about 170 points. This is the candle right here. This is the April candle. So my apologies. We did close out March in the positives. So go ahead and go to a weekly candle so we can see what's going on. And go ahead and zoom in and widen out. And then adjust my candle. So if you can look, here are our levels right over here. It looks like we were able to close over this level of 45.34, which is something I wanted to see. So now for next month, or for next week, we want to see where that candle will go, right? We have a bunch of things going on within the market. We still have Ukraine and Russia, we still have oil, we still have high inflation. So seeing these past few weeks of us being bullish for the week, we want to see if we can continue that trend. I am forever a bull compared to a bear. Reason being is the market is ready to stay up. So once I know that, I want to make sure that I'm getting my setups to go on the long term to be very bullish, which is going up. So this is the S&P 500. We did close above a level, which I wanted to see. If we can stay above this level next week, we may be able to try to shoot back up to 1,800. I don't think we'll get it all in 1 week. That's not what I'm saying. But I want to be able to get to 1,800. Now, once again, my yearly goal, and I'll go ahead and put this up here, what I think we can get to for the end of the year is 50-50. So I'll put this right here and I'll change this color so we can remember it for the next video. But my goal, my goal is, and what I project is SP 500 to get to this clear line right here. This is a finish line that I believe we can get to. So all of my setups, whether it's between S&P 500 or the NASDAQ, are all uptrending. And I want to end up here. So I've bought, that's not even a word. I bought a couple of SPYs once we hit the 42 level, and I think I bought another one once we got to around 41. What is this? 41.14. Yep. So bought a couple. So I am in the green there. I just want to go ahead and be honest with y'all. I did end up setting up a short-term put to protect any downside that I have. I'm still in that. The reason I bought that is if I want to see if we can get back down to 4,200. If we get back to 4,200, I'll sell that put for a profit and then use those profits to buy some more long-term calls for SPY. So just giving you guys what I'm doing. It's not financial advice. Take whatever plans you want. That's just what I'm doing. Now, to go ahead and widen back out, as you can see, this is our 5-year weekly chart. This year we have slid down, started 2021, but this, like I predict, I think there'll be a ranging market with us ending at 50-50. Now going on to the Russell 2000, go ahead and pull this up, widen out, and then pull up. As you can see, we also had a green week for the Russell 2000. We're up by 0.63, with our resistance line coming at 2158. Now, We have been bullish the past few weeks, dating back to January 24th. Now we have been ranging, but if you look, this has been a positive sign of us pushing upwards. We want to see if we can get past this resistance line and close above it to try to get to these next levels. Once again, very positive. If we go ahead and change this to a 10-year month chart, you can see 2 straight months of green after we had a violent January. Now this is the April amount right over here, or the April bar. So, I mean, we've only had, what, 1 day in? Yeah, we had Friday. So, I mean, it's not saying much, but we did open in the green. So we'll see how Q2 goes. Q2 is typically a better month for the market. So we'll watch and see if we get any bullish rallies and watch anything on those end. Now, let's look at the things that have happened. Now, like I said, every week, and we'll continue to say every week, the Russia-Ukraine will be the #1 topic. Will always be #1. Reason being is that we have oil prices shooting up, we have commodities shooting up. We have basically the world trying to punish Russia for what they deem as war crimes against Ukraine. Once again, I am not a political pundit. I'm only doing this for financial education. So I'm not going to dive down anything too deep. I'm just pointing this out because this does affect the market, and I do feel like the minute that we do have resolve here, the market will shoot up like crazy, and we'll get back to things that we know. But until then, this will always be a sore spot in the market, and we'll see how far this goes. I mean, as far as like recent news, we still have negotiations going on. We still have continuous bombing, so please pray for those families overseas. We do have, there were some talks of Russian forces pulling out, or at least reducing in certain areas. And we've had contradicting reports, but we'll see how that goes. And we also had a report of possibly Putin and Zelensky possibly talking sometime this week or next week. There have been progressive talks for both countries, and we want to see this get ended as soon as possible. Moving on to the next thing that happened for the week, we'll be looking at oil. For the week, we pulled back. We pulled back again, moving from $112 to $99. So you should have seen some relief from the pumps. Reason for the decline is that we do have Biden talking about releasing at least 1 million barrels of oil down for the next few days, or for however many weeks that he chooses. This will be released for 6 months. I'm sorry. So we'll see how that goes. We're looking for the U.S. to increase production. We're looking for OPEC to increase productions and basically try to get as much oil as we can to offset the issues in Russia. So this is good news. If you go ahead and look at this chart, this is very, very, very good news. This has been rising every single week since January, with us having 4 declines out of however many weeks. So that's pretty, it's pretty positive, but we'll see how that holds up for us. We do have some analysts saying that prices could increase during the summer months. So that will be something that we will be watching for. Once again, I know a lot of people have been saying that Biden is the reason that oil prices have gone up while Trump had oil prices going low. We just want to have some context about this. I'm not going to call them dumb, but I will say a lot of people need economics. Reason being, if you look, oil prices got to as low as $6.05 per barrel. And if you look, this was during what time? Yes, the pandemic. So if nobody's driving, nobody's going anywhere, and there's not a lot of production going on, you can see how gas prices were low, right? Okay, moving on to 2021, to 2020, while Trump was in office, gas prices were steadily increasing week after week after week. This isn't anything major, this isn't anything that's just rocket science. It's just supply and demand. If you have more supply that outlasts your demand, prices will be low, hence the $6.50. Whereas if demand is outpacing your supply, you're going to have rocket high prices. That's not anything the president sets. It does him no favors to have high gas prices when we're currently in midterms. It makes no sense. But Facebook and the internet are going to internet. So it is what it is. So currently at 99 cents compared to last week where we got to as high as 116. You should see some relief at the pumps recently. Now, moving on to the next thing that happened during the week, we do have a China coronavirus breakout. If you've been watching the news past few weeks, China has had an outbreak in coronavirus and they decided to shut down in certain key areas of China. If you can look over here in these maps in these areas, you can see where the total cases have increased. Definitely increased. So total cases currently since March 20th to April 2nd, 95.8 thousand. 95.8 thousand. You can look where they had everything under control with averages of 41, 63, 100, 103, and then since March, there has been a steady increase, just steadily going up and up and up and up. 7-day average currently at 8,680. This will have supply chain issues for a lot of companies. Most specifically, like we do have Apple that was partially affected since their hub or their production is over there in China. Same for Tesla. Tesla had to shut down for a little bit, had shut down their production. So this is a pretty big deal, especially for US companies that do have production out on that end. So that will be something that we will need to watch. Moving on to KPI numbers, starting early in the week, we did have our JOLTS job opening. A higher actual is greater than our forecast, which is good for the economy. What the JOLTS jobs opening actually shows is a number of jobs during the reported month. So the higher the number, this means more job openings. This means the economy is growing. That means there are new positions being filled. This is great, great, great news for the economy. That's really, really good. We also have our non-farms employment change, which is really, really big and always comes in the end of the month. You can see we came straight at forecast at 455K. Our final GDP number, this is a big one as well. So they usually release us each quarter, like 2 or 3 times, with the final one being the third one. Was a forecast of 7.0. We did miss it by about 0.1, but I mean, it was pretty damn close, coming out to 6.9. So that's an increase quarter over quarter. So that's really good. Yeah, it's still pretty good. With the last quarter being at 2.3, which is above forecast, and the quarter before that coming at 6.7, which is greater than that previous forecast. So we're still doing good. The economy is still showing growth. We always want to have a higher quarter over quarter for us to be in great spirits and positivity. Moving on to what happened Thursday. We do have our unemployment change. We had a forecast of 195, and remember, the lower the actuals is better. We want to have low unemployment as much as possible. We did miss it by a little bit, by about 7,000, but I mean, nothing too crazy, but that is good that we are lowering our unemployment. So if you can look just how the graph has steadily been looking, with the highs being back in April 2020, and we've been sliding down ever since. So that is good news. see if anything happened on Friday. We did have our average earnings month over month. We had an increase of average earnings by 0.4%. So that's good news. The higher the greater, the better the forecast. And this is basically a change of price businesses pay for labor. So that's our wages increase. Have our non-employment change. Now, this is a change in number of employees during the previous months. So we always want to have this number higher than forecast. That means that we're having more employed people during our times. We're having more people getting jobs and being more employed. This was lower than forecast. So that's pretty disheartening. But on the same token, we have been steadily increasing. And if we look at, I believe it's all the big major ones, especially the things that Biden definitely wants to do. So last thing that happened for the week, we did have our Amazon workers who were able to pull off a victory. They were able to create a union. Now, depending on what side you're on, I'm not here to debate either side. I'm just here to say that this is a big win for a union to be created against a major company like Amazon. They typically unionize to fight for better wages, fight for better working conditions, and things of that sort. This is a pretty good article for you to go ahead and read and kind of catch up on what occurred. But this is basically sparked by a young Black man who was fired, he feels like unjustly, and went ahead and created a union during the pandemic. So pretty good story, something you should go ahead and look up. But this could have ramifications, like, for example, we do have Starbucks workers who are looking to unionize as well. So something to watch out for. This could have major implications on Amazon's earning calls. So we will be following up whenever that occurs. Now, going to our stock of the week, we will be covering Little Big Blue. We'll be covering Intel, a major chip company in the game. This is one of your grandfather's oldest investments if he was invested in technology. Now I'm going to give you guys a breakdown. Intel Corporation is engaged in designing and manufacturing of products and technology. The company segments include Client Computing Group, Data Center Group, Internet of Things, Mobileye, and the Non-Volatile Memory Solutions Group. The CCG, which is the Client Computing Group, is focused on long-term operating systems, system architecture, hardware applications, integrations that enable PC experiences. Now, what Intel basically does, it manufactures and markets microprocessors used in servers, desktops, and notebooks. Microprocessors are PC central units, or the brain behind a computer. So this is why this company was very important, especially back in the day. Now that they have lost market ground to companies like, like NVIDIA, Taiwan Semiconductors, ASML Holdings, and Broadcom. And also, I believe they're smaller than their biggest rival, which is AMD. Let me see. So their market cap is basically $196 billion. Let's look at AMD real quick. Yeah, so they're still larger than AMD, but AMD is basically on their tails. Their high was back in 2020. Back 2020, where they got to a high of 69.29, but they're currently at 48.11. So if you bought at a high, let's say you put in $1,000 into this company, you would be down 31%. So you put in $1,000, you would have, what's good math, $690 if you bought at a high. Yeah, that's pretty tough to stomach. But on that same token, we will see if they're able to bounce back from such issues. If you were to look at their performance, let me go ahead and widen this out for a 10-year month. 1-year performance, you would be up or you'd be down 26%. 2-year performance, you'd be down 12%. And a 5-year performance, you'd be up 33%. Once again, they are down 31% from its high of 69.29. They are made up, their two main businesses is their client computing, which makes up 41%, and their client data center, which is made up of 38%. They have had positive OI, which is operating income. And remember, OI is basically assets or your revenue minus your operating expenses to get that amount. They have been flat with their OI year over year. I'm going to pull up some data for you guys so you're not just looking at a chart. So if you were to look at their OI, which is this number right over here, you can see not a lot of growth year over year. Their biggest growth came from 2018 when they went from 18.4 billion to 23.2 billion. And they've just been sitting there, basically just sitting while the revenue has increased. That's not a good sign. This is showing that their expenses have gone up while the revenue has gone up as well. So this is something that OI is a number that we always want to see grow year over year to show that the company does have growth. One thing we also look at is their cash on hand. They do not have enough cash to cover their long-term debt, which is all over here. Looks like they have been increasing year after year. And it makes sense because they are trying to keep up in their space of semiconductors and computer chips. And while they have lost ground to AMD, they said they're trying to come out with their next gen chips by late 22. Now that's pretty unfortunate, especially if you're an Intel company, because NVIDIA and AMD have already come out with their next gen chips, and they just keep pumping out new chips after new chips or after new chips. So that is pretty disheartening if you are a advocate of this company. Let's go ahead and look at their analyst reports. Over the next 12 months, not even the right company. Let's go ahead and go to the one we care about right now. Over the next 12 months, we do have a base case of $54 basically. We have a bear case of $40 and a high bear case of $52. And you can see how the distribution is split over here with a lot of companies in third. This is something that I would be watching if you're really big on this company, but on that same token, you are able to do as you please. Once again, you are able to do as you please. Now for the tip of the week, I want to go ahead and talk about dividends. Now, there are a bunch of individuals who do have dividend plans. So for example, you'll have a bunch of people who believe in high dividend companies like Verizon, right? So if you were to look at their chart, or not even their chart, let's look at Verizon real quick. A lot of people will buy a company just for the simple fact that they have a high dividend. So for example, if we look at Verizon, their yield is basically 5% or annual dividend of 2.56. Now, well, let me show you how this looks like. We would have an income estimator. Let's say we would have 100 shares of Verizon. This would mean that it would cost you $5,212 to own the stock, but your dividend for the year would be $256. Now, depending on where you're at, if we were to divide this by 4, because they do pay out quarterly dividends, 256 divided by 4, that puts you at $64 each quarter that they would send you, right? Now, let's look at their chart. That sounds good and all until you look at a chart and you can see they have been sliding down month after month after month. So you could own 64 shares or 62 shares. Let's do this. We'll do 62.22 minus current price today, $10 times 100. So had you bought 100 shares, you would have lost $1,010. $1,010. Now, mind you, year after year, you would have made, if we keep the dividend the same, $256. So that times 2, you would have made about $515, $512, right? So I mean, that would have cost you a lot. That would cut your account in half or your losses in half, but that's not worth it. I want a good company that's going to pay out in dividends. Now, let's look at another company. Let's say Microsoft. Another company that they pay them, but they're not that great, right? So you can see they don't pay a great dividend at all, right? If you were to buy 100 shares, it puts you at basically 31,000, but their annual dividend is $248. But if you look at that chart. So even if we were to do a 2-year chart, 2 years ago in 2020, they were at $158. Let's go ahead and do the math on that. $0.42 minus 157 times 100. You'd be up at least 15,000 had you bought 10 shares of that stock. Now, let me ask you, for the whole dividend crazy game, right? Would you rather have $500 or $1,500? A lot of times, yeah, I would think so. A lot of times companies will have high dividends, but their chart is terrible, right? Especially at a young age, like for example, I'm 32, I'm looking for the maximum growth as possible. Maximum growth. Now, if you are doing a whole dividend plan, I would not base my entire portfolio into this, right? So like, I'm fine with you doing a whole dividend plan with maybe 5 or 10%, or 5 to 10% of your entire portfolio, right? Like I know a dividend that I like is QYLD, right? Very stagnant. I know what I'm going to buy. Like for example, my cost basis for this company is $20. So anytime it hits $20, I'm buying as much as I can. I'm not here to get the crazy growth, because you look past 5 years, it's gone to as high as $25, it's gone to as low as $17, right? I expect it to fluctuate. But if you look, if I put in that same company, QYLD, 100 shares, $2,000, but that same amount, I'm getting $251, right? Almost damn near as much as Verizon and more than Microsoft. Now, again, this is a monthly dividend, right? Bringing in at least 12%. So there are good companies out there, and there are some terrible companies that do offer high dividends. But having the right strategy with your dividends makes all the difference in the world. So I don't want you guys just out there just chasing companies just for the simple fact that they pay high dividends. Really look at the chart. Really ask yourself, does this make sense? And if it does make sense, go ahead and craft a nifty plan for your account for it to make sense. Now, that is Stockommon Sense. I appreciate you guys for rocking with me, for listening in. If you guys can go ahead and leave feedback, if there's anything you want to see from next week over a tip or something. I'm not gonna say advice, that's not allowed. But if you want some clarification on something, go ahead and leave that in the comments below. Subscribe, share with a friend. Once again, we do have a stock club. Prices did go up. I did offer a sale that was 50% off, but prices will be going up. Now, it won't be anything too crazy, but prices will be going up as we continue to get more individuals within the group. So something for you guys to go ahead and think about. I did have a individual go ahead and send a testimony. It's on my Instagram right now, that he did say he was able to double his money since he started working with me. And this was pre-pandemic, right? So this is something that I want to make sure that my Black and brown people are able to do and are able to profit off of. So go ahead and hit me up, subscribe, follow, share with a friend, and I appreciate you guys for rocking with me. You guys have a great day.